Hello and welcome to this on-demand panel discussion for GTR Nordics 2020. Thank you for joining us. We're going to be looking at evolving compliance challenges and how to beat them. There's plenty of ground to cover there, of course, but we're going to be looking a bit at how and why the COVID-19 pandemic has changed risks around financial crime, whether remote working has created challenges in responding to those challenges. And we're going to be looking at what's changed around international trade sanctions. So ultimately, what approaches companies can take in trade and trade finance to stay on top of the compliance burden. Obviously, this isn't a live panel, so we can't take questions in real time, but if there are any threads you'd like to pick up after watching this, please feel free to use the discussion forum on the event platform. I'll introduce my panel in a moment. So first of all, I'm John Basquill. I'm a senior reporter in GTR's editorial team. I'm delighted to say that joining me are two true experts in this field. I'd like to introduce Armi Daniel, who is Chief Executive Officer at Windward, and Antti Niemelä, who is Head of Transaction Banking Sales at OP Financial Group. Maybe just to set the scene, and Armi, I'll start with you here. Maybe you could tell us just a bit about Windward and how you interact with these kinds of discussions.
Sure. Hi, John, and happy to be here. Hi, Antti. I'd love to do this in person one day when it's all over. So I'm Daniel, based in Tel Aviv, CEO of Windward. We're a tech company combining AI and shipping expertise to build risk analytics platforms. We work with energy companies, banks, insurance companies, shipping companies, governments to help them stay ahead of the risk and optimize your business. In other words, we have all these regulations coming online, OFAC, OFSI, you have internal governance considerations, you have an increasingly complicated world of AML and financial crime considerations. We try to be the best in the world in shipping plus AI and help expert users either screen things better and afterwards investigate things better, more efficiently, and flow results at a heartbeat instead of days.
Great, thanks, Armi. And over to Antti, same question. Maybe you could tell us a bit about your role at OP.
Yeah, sure. Thank you. It's great to be here, Amy and John. I'm from the banking side. I'm helping, and my team are helping our customers to make business. So we are on trade financing, cash management, supply chain finance, and all the things that involve money flow supporting trade and trade financing. So we do quite a bit of work with customers and make decisions based on information you, Amy, just mentioned on a daily basis.
Great, thanks. It's great to have you both on board. We appreciate you joining. I think it makes sense to kick off by talking a bit about the relationship between the COVID-19 pandemic and financial crime risks. So around the start of the pandemic, in those initial few weeks, when countries were going into lockdown, people were starting to work remotely. We started to see warnings from Europol, European Banking Authority, and others about how financial crime risks were changing. Different fraud patterns were emerging. The risk of certain types of maybe trade-based money laundering appeared to be increasing. Would you say, Antti, I'll start with you here. Would you say that was felt on the ground, or was it kind of business as usual for you?
Yeah, it was clear that there was a kind of like a new wave along with COVID-19 when we talk about financial crisis. It's the risks. Usually we see those peaks during the summertime, but it seemed that COVID-19 brought the summer a bit early, and we did see more attempts and other topics which related to financial crimes. Maybe if we talk about trends, what we saw is that when we talk about new goods and protections and disinfection goods that were on the market, we saw lots of attempts, whether they were providers or sellers who were trying to come to the trade flow with fraud attempts. that's definitely what was going on the springtime, and we still see those.
What kind of fraud are we talking there? Things like kind of counterfeit medical supplies, that sort of thing?
Yes, that kind of stuff, and very unusual trade flows, partners that are not usually involved with that kind of goods and so forth. So kind of like unusual patterns on the trade flow. That's what we're seeing. And also because of the remote working, there were attempts to change bank account numbers and making other frauds that we saw. For example, if you have supply chain financing programs, there were attempts to change, bank account numbers and so forth. So that was definitely a peak around those topics in the springtime.
Right. Okay. Great. So an uptick in unusual trading activity, and also an uptick in the kind of threat on the cyber side. Antti, does that ring true with you? Is that the experience that you were hearing from your clients?
Yeah. So I think maybe it's a good time to reference Hin Leong in Singapore crashing and burning. And I think it's one of, obviously there's a bunch of issues right now with GP Global and different entities. In the last GTR panel I've participated, I heard a great stat, which was I think from the guys at HSBC in Citi, that the global revenue for banks in the world from trade finance is 4.7 billion a year. Net revenue, not gross revenue, because obviously they can take a cut, right? And out of that, Hin Leong was about 700 million of loss they had to write off, earlier this year. And if you drill down to the documents and understand what happened there, it's really a case of fraud, where people would, finance something, they would buy and sell from a certain commodity trader the same day for the price, and use that letter of credit somewhere else. And I think that's probably not related, but also is related to COVID. Because I don't think you can really isolate COVID from all the rest of the things that are happening. For instance, oil prices. And as we know in commodity trading, it doesn't really matter what the price is. What matters is the volatility. As long as there's volatility up and down, people make money. Actually, this is a quite profitable year. You can see the CEO of SOCAR Trading saying, they've overachieved. You can see, BP and Shell report that, and, extracts from their public reports. So when there's volatility, then you can make more money, but also you take higher bets. And your value at risk, which I think is a key parameter, I think probably gets bigger oftentimes. So I think if you connect all of that together, volatility, people taking more risk, Hin Leong crashing and burning, credit crunch from banks, a lot of fraud, then absolutely the answer is yes. But that also triggered already, because I think the pace of everything really accelerated in the last few months. At least what we see, that's what we see. That really accelerated banks, some banks like ABN AMRO pulling back out of commodity trade finance, and other banks really toughening up the requirements, and that dried up other commodity traders' availability for cash. So I think all of that's always a long way of saying that there's a lot of things happening that influence reality, and that reality creates more fraud. Recently, we're working with one of our banking clients. I was really interested to see not just the compliance team's response, which was basically, yes, this OFAC, what we had before May 13 when the OFAC our advisory came out isn't good anymore. We need to go next step. We'd love to work with you. But also I was particularly interested from the operations team's feedback. The operations team feedback did manage to find multiple cases of fraud where they were actually going to their bank and saying, hey, we need a letter of credit. We're going to do this and this deal. And they actually did it. And the bank's feedback that historically there's a disconnect between the paperwork and the real world. And I'm wondering if COVID-19 and digitalization, everything we're seeing, will actually, create an accelerated conjunction point of paperwork in the real world. And, I think the fraud that Antti spoke about, I think really speaks to that, because it's exactly the same methodologies, right? It's do these partners usually do this trade? Is there new bank accounts? Does it make sense or not? So that's at least some of what I've seen in the markets.
Interesting. Okay, and it's interesting to hear you raise Hin Leong in this context, because obviously the fraud that emerged there was happening before COVID-19, but it was this kind of squeeze on liquidity that that brought it all to light. And then I'd imagine that trading companies that were engaging in fraud just as a way of obtaining working capital, once that working capital gets squeezed by a crisis like the pandemic, that's when banks are really on the hook and they need to be more vigilant. How can they go about doing that? Antti, maybe I'll put that one over to you.
Well, I think just want to add that the market was acting funny, like you, Amy, referred and John referred. The liquidity was difficult, and that's something that causes also other patterns of behavior from the suppliers, buyers, and sellers. So that's one thing that was probably adding to that point. And the other part is that there was just extensive need for these protection goods and all that at the time, and every country and every nation were tracking all they could get, and it kind of caused, in a way, a sense of panic and misbehavior in that sense, and caused some of the possibilities for fraudulence and so forth.
Yeah, you know, I had one of my a bit older friends had a great sentence that I really liked to talking. He said, "If you walk in the gray, you end up falling into the black." Yeah. And this guy is like a hardcore intelligence guy who's seen everything in his life probably. Mm. So I think that's a good connecting line, right? If it's not that the life is black and white in these things. It's not everything is a fraud, right? So you start from little bit and then you grow from light gray to darker shades, without referencing the book, obviously. And then something happens, things blow up, and you have a gun to your forehead, obviously a virtual gun to your forehead, and then you go past what you're supposed to do because you're panicking, and then things blow up even more. So that's why the culture of how you do business is as important as the process and the technology.
Exactly.
So does that culture point then, does that answer what I was going to ask was, one thing we saw with the pandemic was, as well as this rise in kind of counterfeit medical supplies and unusual trade patterns, that kind of thing, we saw companies that didn't historically make that kind of protective equipment suddenly turning to produce, masks, aprons, and things like that. How can a bank, when faced with that kind of changing activity, both from legitimate and non-legitimate clients, how can they spot which is good and which is bad? Or in Armin's example, how can they stay out of the grey?
Yeah, I don't think there's a magic formula for that, but I'll paraphrase a known Hebrew idiom. Whoever we have in the Jewish culture, our holy day is Shabbat. It's Saturday. It's basically like Sunday in the Christian culture. But we have a sentence that says, whoever worked and prepared before Shabbat on a Friday Eve can eat in Shabbat, because you're not supposed to cook in Shabbat or to turn on the fire. So this is my answer for COVID. If you don't build these things in a day. If you build leadership, you have a compliance officer, or you have AML people high level at your board, and you could see Danske Bank really the revolution they've done the last 3 years. And you're from that region, Antti, you know that very well, obviously. But bring the chief compliance officer to their board. So if you start with leadership, to equip them with technology and processes and culture, and create a strong culture of dialogue, so the compliance teams and the business teams aren't one at each other's throats, because the compliance is killing the business and the business wants to do business and they hate compliance, but they understand this is a complex regulatory environment, they need to work together. And if you have that communication and kind of this checklist that I just said, then when shit hits the fan, you can really deal with it and understand who's really pivoting because their business is absolutely changing, and who's just doing fraud. But if you don't have that, and you don't have good communication, you haven't built this culture, then really the business team will tell the compliance team, you're stopping me again from doing business. This is the most stressful time of my career and you're not helping you. And the compliance team will tell the business, well, everything's blowing up right now, you can't do any business, press stop, and then you just lose the market share. And your clients, the clients of the bank will say, hey, Mr. Bank, you weren't with us at our hardest hour. And that's what banks are there for. That's what insurance companies are there for. They're there to support their customers to do business, especially when they need them, not when everything is smooth sailing. But that's just my perspective.
Yeah, well, that's a good question. How does the bank detect that kind of unusual trade? And well, I always say that if something is too good to be true, it's probably not true. So it's basically when we talk about trade and we see the trade pattern, we know the parties we are working with. We can see and we can find from those trade patterns and supply chains, we can see what's right and what is not right. So kind of a unclear response on that sense. However, we do have systems that follow the trade and follow the cash flows and see the transactions, how they go and if they are usual or unusual. One important thing when we talk about that part here is also that there were frauds that were concerning our customers, and of course we need to consult and help our customers to be safe. So we actually could bring them and ask questions from them and kind of try to bring the attention that if this sales which is on hand, which is there's good profit for our customer, is that really so good as it looks? And if the trade financing instruments are used, and if they do the KYCs and the whole protocol on their supply chain, they will detect things which are not right there. So I don't think, I think Amy, you said it well. It's the culture, and it's not one spot that is spotting the fraudulent trade there. It's the whole system that does it.
Yeah, Antti, but I think you're raising a really interesting point, which is what's the evolving role of the bank? Because I'm not, again, I'm obviously not I don't have your level of expertise, but I think this is one of the first times I hear a professional at your level say, this is part of our role to consult our customers. So I think traditionally banks were more of a transaction oriented, and I'm not sure, traditionally I've heard many people from this space think about customer experience oriented. I don't, is that a fair statement, or?
That is, yeah. I think we survive as well as our customers in the long run. So we want our customers to, be safe and do good business, and we of course want to support their business. But if we see that this doesn't look right, we want to point it out. And usually it's also when we do these know your customer protocols as they should, we detect those things and those topics, and we can have, and we will have discussions around those with our customers. We did detect quite a few fraudulent cases and through those processes, and that's part of that. What your customer is doing, and how the trade flow normally goes, and that kind of situations. Yeah, but I think that's what banks need to do also.
So Antti, then, is that the way of resolving that conflict that Armi talked about between the business-focused teams within a bank and the compliance teams within a bank? They have to be working towards this common goal.
I think that's the key. That's the key. I don't think it's just one single point or one responsibility within a bank, if I put it that way, to detect those topics that regarding to the financial crimes. It's the culture, and it's the way of working, and it's also the mindset that we want to work that way. And also, if we think business relationships in the long run, our customers don't want to breach compliance rules, and neither do we. So when we do that together, I would expand that to our customer level as well. We all want to do business which is compliant, and then we can help each other doing it. And I think that's very important point.
Yeah, but John, if I can build on what Antti is saying, and I think that's a nuance I understood in recent months. I think if you take a step back, with all this wave of regulation, at least in our space, from regulators and shipping, and actually in trade finance as well. And there was this big paper from ACAMS that came out last week. I'm not sure if you've seen it, but basically ACAMS, which is the biggest community for AML, financial crime professionals in the world, wrote this huge paper about American sanctions compliance. And the executive summary of this is, get with the program. This is not going anywhere. You need to do something about it. So if I build from that, we actually see, I think, two very different parts of the market. One part of it is, let's call it the shipping and trading and insurance guys, and they don't really have like structured compliance functions, or maybe let's say many of them. I spoke to a CEO last week. He told me, I'm a CEO and I'm the chief sanctions officer. So listen, you're a CEO, you're running the company. It's not as easy doing this. Like, you have a lot on your shoulders. So doing that in sanctions in this today regulatory world, that's complicated. But then you have the banks and the financial institutions. And then the financial institutions, I'm not sure that in shipping and trade finance, they really know what to do with this regulation. Because as Antti said, and this is something I've learned in the last few months, there's a lot of people in the bank that share the same responsibility from different angles. And Antti, again, tell me if you think I'm kind of on the spot here or not. So you have the compliance teams and the sanctions advisory teams, but that also flows down to a large extent to the level 1, level 2 screening teams. Then you have complex investigations. It deals with AML and financial crime. And these guys kind of work in distributed teams. It's people who don't get banking, don't get it. And sometimes it's international, and you have front office and back office, and it's like unclear, because if you go to a trader or a shipping company as a vendor, which we think of ourselves as a technology partner, but some people call us vendors, then it's we have a very clear question. So who owns compliance in this room? Who's the GC? Boom, you get an answer. But if you speak to banks, there's no one question. It's kind of like, what's the process of sanctions compliance, AML, financial crime? What's the technology? How do you think of risk-based compliance, and how does that evolve? And maybe, just maybe, that's kind of disparity that's building between the banking community and all the rest in this space. And that's why ACAMS wrote that paper, because the banking community, there's no single point of contact or authority that should take this paper for OFAC. It says, you know what, I own this now, because it needs to waterfall through all of these functions. Antti, am I making sense of kind of how I'm thinking about it?
Yes, I mean, I think it's very interesting that you say that, and it makes lots of sense to me. I think if I think about the regulation part and the trade part, and if you think of it, you can be really good with regulation. You know everything what's there. You are all updated all the time, but it's not helping if you don't understand how the trade flows goes and how the money goes. Sure. You probably heard the joke about the well, it's not a joke, but Willie Sutton, the bank robbery. He got cut. The U.S. very famous bank robbery. He got cut, and the judge asked him, "Why did you really rob the banks?" Well, he said, "Well, that's because that's where the money is. So that's why he robbed the banks." And if you think of trade compliance rules, you have to understand how the money goes in those flows and how the transaction goes. It's not enough that you understand what the rules are and you know them just as the rules. You have to kind of connect them with the business, and that's very important point. That's why it's not enough, in my opinion, that you have only compliance officers looking at different cases. You also have to have the business people who knows how the money flows are going underneath.
Thanks. I think there's a few interesting threads we can pick up on a bit later on when we come to talk a bit more about how technology can help with some of this. But
Sure.
I think it's probably worth, before we get to that, spending some time talking about sanctions. So we've seen a pretty steep increase over the last few months in sanctions-related activity, particularly from the US, but not exclusively. Armi, I wonder if maybe you could maybe set the scene a bit, talk us through what has changed, how are expectations changing, who is expected to be paying attention to sanctions risks now?
Yeah, sure. I'll simplify that because I think a lot has been written about this topic, but let's take a step back and let's go one by one. I'll a bit oversimplify it because, it's a panel discussion, but don't take this as a legal advice, but I'm probably going to be directionally right. So if I take a step back, before May 13th, 2020, most of the sanctions compliance people have done was they had a blacklist. They would run World Check 1 or something against that blacklist, 11:59 p.m. at night. Everybody's happy. On May 14th, 2020, the world changed in this space, in shipping and trading, because basically the US enacted a new round of advisories, and they I'm going to quote from the paper they wrote 2 days ago. I'm not sure if you've seen it in the State Department. It was really interesting in a sec. And they've said, listen, there's no such thing. There's still the blacklists, but there's no such thing as a whitelist anymore. Why? Because the world of shipping is dynamic, and we expect everybody who touches a ship in any form in the trading cycle to do more. Now, that doing more, they set a bar, a bar, which is actually they think of it right now as a new floor of things you need to check, whether you're anybody. And we've spoken about banking, so financial crime, AML, compliance professionals, and so forth. And that list of things, I think I'll name a few: every ship-to-ship transfer that a vessel had done, every flag hopping, complex ownership structure, dark activities, which is intentional turning off transmissions, loitering, voyage irregularities, to point to Antti's point on where does the money go and the trade flows, and so forth. And these things, first of all, are subjective. I think that's the most important point here. It's not an objective go, no go, blacklist, non-blacklist. It's a behavioral pattern. And in order to figure that out, you can't really do that manually. Now, the problem is that most of the proper world had something in place on May 13th. All the big banks and all the big traders and all the big energy companies had something. There are 3 or 4 providers in the world, and they bought their stuff. But now, May 14th came, and then in July, the UK government came again, and OFSI, the Office of Financial Sanctions Investigations, came as well, and said the same in July, give or take. And it's just not enough anymore. So whatever you had on May 13th is not enough to meet that bar on May 14th, and the reason is it's too complicated and at scale. To do this for one vessel for the past 12 months, it will take you 2 to 2.5 days properly if you're an expert. So if you're a bank that finances, 5 million deals a year, are you going to do 5 million times 2 days? Of course not. Now, although they're called advisories, I want to read to you from what was published 2 days ago by the State Department. I actually have it here. It says, risk-based compliance is more important than ever. The private sector needs to know everyone involved in a transaction to ensure recipients and counterparties are not sending or receiving commodities that may trigger sanctions. So I think the key term here is risk-based sanctions. And now that is evolving really quickly because OFAC just last week, I think for the second or third time ever, blacklisted a broker. So ship brokers and cargo brokers were like, hey, it's not my problem, you know, I'm just a broker, I'm just getting commission out of here. And then the US said, when we said everybody, we actually meant everybody. So I'm not sure the past performance of the shipping and trade sector in terms of sanctions is going to be the future performance, because this is exactly what happened in the financial sector 20 years ago. And I'm sure, Antti, you were there when it happened, you know that. And today, if you want to wire money between point A and point B, when we get paid from our customers, our bank in London calls us and tells us, can you give me that contract where the customer says how much money they can pay you? Because if not, you're not getting the money to your account. And for them, it's just standard practice. And we said, sure, no problem. We press send and we get the money. But that's just a new bar. So that new bar just came into shipping. And I think a lot of parties are scratching their heads right now and saying, what should they do about it? Because they're not really used to using AI like in other sectors of financial services. John, is that a good rundown of what happened?
Perfect, Ami. Thank you. Maybe I could put that point around the new bar to Antti. So obviously, financial institutions have had to worry about sanctions, about processing transactions that could be linked to, for example, oil from Iran, to pick up on Ami's example from the Treasury Department a couple of days ago. But have you noticed that since the advisory, or in the lead up to the advisory, patterns have changed around how banks can meet their compliance requirements? Are you taking this on board, that vessel behavior is now a big part of your due diligence process? Has that kind of landed from a bank perspective?
Yeah, that's a good description by Amy. If we look 2 years back, we were talking about know your customer, the customer you were selling, and now if you look, let's say OFAC sanctions, what they've been prosecuting, you find that actually the perspective is not on the seller side anymore. It's also the supplier side, and also, as you Amy referred, on the any other party who is involved in that trade. So that makes it really very much what's more complex. It really means that you have to know where you are buying, what you are buying, who are partners in providing those goods or services, what those goods and services include, and you have to do the screening for all of those parts. So all I can say is it's much more complicated, and of course we're referring to technology earlier. That's something that it's of course valuable in that perspective.
Yeah, I think Antti is really being nice here. My answer is no. I think this regulation, when it hits shipping companies, energy companies, insurance companies that don't necessarily have already a strong compliance function in place, that is with most of the trading, the commodity traders. The commodity traders, the kind of the leading part is the operations and the business part, and the compliance function isn't necessarily a strong function or a big function. You could have like a couple of people doing compliance across a $300 billion business, like the big commodity traders in Geneva. I've seen some of these. So for them, if they understand that the bar has changed, saying if, I see some of them get it, but some of them still don't get it because they need to change, but they're going to wake up really soon to that. As other market leaders adopt technologies, they're going to follow the fact they won't have a choice, in my humble opinion. Then I see them adopting quicker because they're building from the ground up the compliance function. They can inject AI technologies into these new functions. Whereas banks, regulation doesn't meet a single compliance function. There's no single point of failure, like Antti said before. It's a combination of the business operations, financial crime, ML, first level screening, second level screening, compliance, sanctions advisory, and so forth. And it's really tens, if not hundreds of people. So thereby, I believe banks are a bit behind the curve versus the intuitive ahead of the curve I would expect, because I would expect that because they have these so big compliance teams, they have expertise, they have the culture, they have the know-how and so forth, and they do, but they just have so many things going on with all this COVID thing and all this regulation that just haven't got to that yet. And therefore, I expect the adoption cycle to really accelerate over the course of the next 6 to 18 months as people get that, and more public market leaders go public with, we've done this, we've done this, we've done this. That will create a new bar in the market that everybody will have to meet, or else, they're going to be going to get somebody cracking down on them, like the US just cracked down a bunch of brokers last week, which they haven't really done a lot in the last few years. Really, brokers, I wouldn't say they were immune, but the perception, if you would have talked to ship brokers, they would have told you, us, compliance, we're just brokers. We're just helping people find deals. And I think it's really changing.
Great, thank you. Ami, I wondered if I could ask you quite a specific question around this.
Anything for you, John?
Appreciate it. Around this behavioral analysis point when it comes to due diligence on vessels. So in the past, a lot of this seemed to revolve around when ships went dark, so when they stopped transmitting their location. I saw an article from Windward relatively recently, a few weeks ago, which said there's been a significant drop in the number of ships that seem to be going dark over the last few months. And I wondered, do you have a sense of whether that's because the way these guys are trying to evade sanctions is changing all the time? Is it because there's just been a general drop in the amount of shipping activity going on because of the virus? A bit of both. I wondered if you could shine any light on that.
Yeah, sure. So first of all, as far as I know, there hasn't been a change in the shipping activity because of the virus. Maybe Antti knows differently, but basically the world trade is ongoing. So I don't think there is anything different in the volume. Antti, would you agree with that from what you know?
I agree with that. Yeah, it's that cannot be the explaining factor. Maybe something else. I'm interested. Whatever you come up with.
So we've been in this business for 10 years now. Also in the previous cycles of sanctions before these deceptive shipping practices, and we see this constantly happening. So every time there's an article, I'm not telling you about regulation, an article about a pattern, like a guy like you have Jonathan Soul from Thomson Reuters, which is really a brilliant investigative reporter in shipping. He's done really deep pieces a few times. You have you John, and GTR who've done some great pieces. You have Wall Street Journal, they're coming out with these pieces. Every time you have a piece, you see the pattern change. Because these are people. Basically, you're talking about people who want to make money, who need to make money. And you have people like banks who are reading these articles and looking at these places to just do other things. So actually, we had one of the industry players reach out to us over email, by the way, John, because of that blog, asking us to take that down. Because he told us, you know what? You're contributing to these guys circumventing sanctions. And our answer was, you know what? I don't really think about it this way. I think it's market education. So we know Windward isn't really the only player in the world who understands shipping and sanctions. You have all the US government on this. You have the UK government on this. You have Japan, you have Singapore, you have everybody working on this. So if Ami's going to stop writing on this, everything's going to be cool? Probably not. Really what the regulations try to do is it try to remove the onus, to transfer the onus of doing the enhanced due diligence from the government to the private sector. And the private sector needs education because they haven't done that. So we've been doing this for 10 years with governments. But really only over the last year, maybe year and a half, it's been the case where industry giants like BP have chosen our technology. And we're going to announce a bunch of new, very exciting, very big institutions that have chosen our platform soon from the Nordics. So stay tuned in the next couple of weeks. But it's really, we're seeing the industry giants flock into that and saying, well, we can't do this without AI, and actually look at this as an opportunity to digitalize their business. So these guys are not saying, oh my God, that's a nightmare, I need to do compliance. They're saying, well, it's happening either way. One, we use this as an opportunity to be at a cutting edge, adopt AI, And by doing that, they're constantly finding more and more and more use cases from this compliance thing. So they're using compliance as a core, but then some of them say, well, what about governance? Could we use this for governance as well? Oh, cool. What about automation of war risk insurance? Oh, can we do this? Yeah, sure, we can do this. Well, what about vetting? There's a lot of cases in the chartering process and vetting. What about information sharing? What about carbon emissions? They're like starting from a core and growing. So I don't know if that makes sense, but I think it's a great leadership angle. Deal with the problem, but actually flip it over its head and see this as an opportunity, not just a challenge.
That makes sense to me. Antti, first of all, do you agree that this is an opportunity, not a challenge? But second of all, I also want to ask you, Ami made the point of how much easier it is to put these kind of technology-driven compliance solutions in place if you're doing it from the ground up, rather than if you're already an established institution, you've already got your kind of processes firmly in place, you've got your IT systems in place. How do banks grapple with that? Surely they can't just kind of build a whole new IT infrastructure every time that they're forward in technology.
Yeah. Well, of course not. I have to first add a bit what you just said about competitiveness. I think that's what I heard. Did I hear right? Meaning that actually, if I look at the companies and banks who are doing the proper work on this area, having good procedures, having KYCs and all the procedures in order, that's actually something that they can act more agile when it comes to changes in markets, and also they can deal faster with the customer onboardings and screening the transactions, which means that if you're in trade financing business as a bank or in transaction business as a bank, you are able to screen those things more efficiently, and that's increasing competitiveness. And the same goes to the corporates and customers. If they can do their processes fast and quick and with less money, that gives them the edge to do things more cheaper. And when you think about all these compliance topics, what a corporate needs to do and deal with, they have to be prepared when they work with banks to give them the information the bank needs just to detect just to be compliant. So if a company can provide the information and gather the information faster than their competitor, they get some competitive edge, and that's at that side. So what I'm saying is that if you can do those procedures of compliance which are required, they're prerequisite for making business. If you can do them faster and more agile way than your competitors, you are actually gaining a competitive edge. And what comes to the vessels, I think the banks are pretty good about asking all those informations regarding the trade flows and transactions. So I think we have been doing also kind of educational work to bring in the information and the need for the corporates about the needs. There's lots of very good companies doing really good job and providing the information and doing things very efficiently. But there's something that I think banks need to also bring up to their customers and explain what kind of information is needed and help the customers to acquire the information while they doing business with their customers. Is that making any sense to you?
Absolutely, yeah. Thanks. But presumably, it would be helpful.
Can I jump in and add something on that? Because I think on the IT side, and let's simplify that. Basically, banks are not going to use multiple screens. That's the bottom line. Every bank has their own IT system, and they're getting multiple feeds from multiple vendors. They need to make sure every one of these feeds is based on AI, so they don't get raw data, because they just have too many feeds like that. You know, they're looking at all. So vessels and trade and stuff like we do is an important part of the picture, but it's a part of the picture. It's absolutely not all the picture. So they need a feed, the API data feed that provides you just the recommendations versus the raw data. I think that's one way to look at it. At the same time, what we see is there are expert teams in the banks who would need dedicated expert investigation workflows. They're not talking about hundreds of people. You're talking about probably a few tens of people, who would still need software as a service for kind of drill down. So that, I think what I try to say to that if you're a proper bank, which obviously, you know, all Western banks are, and many of the Eastern banks are, at least all global banks are, let's call it, and many of the regional banks, then it's not that hard. You start by using software as a service, you sign up, and in 3 to 4 months, you already have the API integrated, and you move on with your life, and you provide the dedicated workflow to the experts. So I don't think it's such a schlep if you decide to do it. So I don't think the problem is an IT problem. The problem is more what I think the challenge is what Antti alluded to, which is education and process. Actually, it's a three-sided market, because you have the banks, you have the corporates, which is basically the traders and energy companies and so forth, and you have the shipping companies. So this is the kind of the three parts of the triangle, right? And you know, every one of them right now is dealing with it, but they all trade together in the same cycle.
That's great. Thank you, Ami. I'm afraid to say that we're out of time. Much I'd love to continue that discussion. So first of all, to all those of you who've tuned in, thanks so much for watching the session. Please do feel free to pick up the conversation in the discussion forum. And of course, a huge thanks to Ami and to Antti for joining the panel today. Really appreciate that. I hope you enjoy the rest of GTR Nordics. Goodbye.